All right, welcome back to Denver today. Stocks rebounding in what's been a choppy week. For more on what the final 2 months could hold for the markets, I'm joined now by Sonali Basak, iCapital's Chief Investment Strategist. It's so fun to see you out here.
Good to see you.
Are you as optimistic as I think the consensus seems to be?
You know, it's interesting. We're looking at a market that's around fair value for where we thought this year would end. And so what does that mean? That we could see upside from here, certainly, but it could be choppy on the way there. And you think about that just through the context of data releases alone, how choppy the end of the year could get because of the data collection issues that we might have with the government data, as far as the next couple of releases, not September, but October and maybe even November at this point could be compromised in terms of the breadth of data collection we get on jobs. And as investors read through that, will there be some nervousness? We had the brunt of earnings, and the NVIDIA moment is 2 weeks from today.
That's right.
But we've already seen what we're seeing kind of as a pre-announcement, right? When Jensen Huang comes out and says there's going to be $500 billion worth of orders, you've seen that big jump. Can you see just as big of a jump when you get into that earnings cycle?
The lack of data, I guess, plays directly into what the Fed may do between now and the end of the year, what they feel comfortable doing based on the limited amount of data they have. Do you think December's at risk?
We think December's live. Let's put it that way.
Okay.
We do still think the balance of risks is more towards the labor market and supporting the labor market. And part of the reason we feel that way is when you looked at even the last SEP, you did see the Fed baking in elevated inflation. They didn't expect 2% PCE until 2028 anyways. So when you think about the labor market, we are seeing promising data from ADP and other alternative data sources. With that said, we do believe the Fed will want to step up and support that labor market that has been in this low higher state right now.
You heard about, some of the conversation that we've already had on the show today about, whether there's been an inflection point to the degree where we're just going to be more scrutinizing of spending and where some of these stocks are. A, do you think that's true? And what impact might that have on performance of those names between now and the end of the year?
It's so funny. A few weeks ago, I heard you voice some concern around the debt-ladenness of this AI boom. And a few weeks ago, I disagreed with you, actually. You look today, and you see the story starting to change after earnings. Meta, for example, you had seen them being among the biggest drags on EPS in what's otherwise a very healthy environment for earnings growth for much of the S&P 500. When you look at Meta, a day later, they turned around and raised money in the debt market, which draws the question, are there other ways to access the AI theme without that stock market volatility at the valuations that we are at today? Now, one interesting statistic, you look through the end of the year, and the CapEx to free cash flow, the ratio is like 70%. We think that could grow to 75 to 80%, and you have others worrying whether you're going to start to see negative free cash flow for some of these firms. So we do think that how the CapEx boom is financed is going to be a big story going into 2026.
I mean, you mentioned NVIDIA. Is there any reason to believe that whatever happens in 2 weeks is going to somehow be construed as a negative? You hear from all the hyperscalers of what they're spending directly going into what NVIDIA is reporting. And as you said, Jensen Huang, we keep hearing from him talk about how positive their business continues to be. I mean, it'll be a market-moving event, I guess, because it always is, but is there any reason to think that it's going to be something negative?
That's not even where I'm really going with this. It's more that, will it be that catalyst that investors are looking for into year end? Like I said, we do still see upside from here, but will NVIDIA be that catalyst? I think one thing that's really interesting, Scott, is the composition of the Magnificent Seven. We would urge investors to look at how the individual components are performing. And the rotation you've actually seen in the last couple of weeks to some of the laggards now catching up, but some of the highest performers now falling behind because of how that CapEx story is changing.
Well, what about that? What about all these other parts of the market? Like, is there a surprise out there between now and the end of the year? I mean, healthcare's picked up a lot. That's no longer a surprise. Now people are sort of saying, okay, the trend's legit. I believe in that. What else?
You don't think it's a surprise that some of the greatest performing sectors right now on an earnings basis are falling behind? I think it's really interesting that you see financials, a theme that we've loved all year, still down, relative to the S&P 500 more broadly, it's trading 13% below. And so wouldn't there then be room for more growth there for a sector that has seen 20% EPS growth? It's interesting to us that we're not seeing investors yet really flock to quality and still trade on vibes.